Welcome to the Mortgage Rates Weekly Mortgage Market Update for the week of December 21st, 2015. Hello, I'm John Thomas with Prime Residential Mortgage, here to give you an update. Well, last week was finally a good week for mortgage rates. If you take a look at the bond chart on the screen, you can see mortgage rates were finally able to bounce off a floor of support, move the bond higher, which moves interest rates lower. So finally, a very good week last week. We've been selling off for the last couple weeks in the bond, moving interest rates higher, finally able to rebound lower. So we are right below a ceiling of resistance. We need to break through that ceiling of resistance in order for mortgage rates to move lower. If we get turned, the bond gets turned lower at that ceiling resistance, you're going to see it sell off and interest rates move higher. So we're recommending floating your mortgage rate to start the week, but be mindful if the bond does not bust through that ceiling of resistance, it could get turned lower, and that would see interest rates move higher again. So carefully floating your interest rates. If bonds switch course, will quickly switch to a locking stance. Now, if we dig into the economic news, big news last week, the Federal Reserve's Open Market Committee met, and they decided to raise the federal funds rate 0.25%. The federal funds rate is the rate at which banks lend money to each other at. So it affects short-term things like auto loans, credit cards, home equity lines of credit. It does not directly affect mortgage rates because they're long-term rates. So you can see the Fed's actually raised the short-term rate by 0.25%, but mortgage rates actually moved lower. So they're not hand-to-hand. You got to be careful about the news you watch on TV because them raising the Fed funds rate does not directly link to mortgage rates going higher. It actually was the opposite effect, and in history that's been the opposite effect. Short-term, when they raise the Fed funds rate, we get actually the mortgage rates go lower. And the reason why is money from the stock market typically will sell off when they raise the Fed funds rate and move into the bond market. So short term had a good effect on interest rates. We'll see if we can get some momentum to break through that ceiling resistance and get the rates to move lower. Now, the Feds in that statement also said they believe the economy has made considerable progress since the worst recession since the Great Depression. The decision to raise the Fed funds rate is based on the belief that the economy will continue to strengthen throughout the year so that they don't need to be accommodating. The economy can stand on its own 2 feet. Now, we also saw a weekly initial jobless claim come out last week. It came out at 271,000 claims. That's a drop of 11,000 from the previous week. So again, that's good news supporting the Fed's decision. The labor market's doing very well. Jobless claims still remain below 300,000 claims, which is the mark for a good jobless report. So all in all, good news supporting the Fed's decision. Now in housing, we saw the November 2015 housing starts report released, and it showed that housing starts did move up pretty much 11% from the October. They went up to 1.173 million units, and that almost erased the drop of 12% we had from September, October. So we had a big drop in October. That's been almost totally erased with the jump back up in November. So new construction looking very well. We also saw building permits jump up about 11% from October to 1.289 million units. That was better than expectations. And building permits is a sign of future construction. As they're applying for permits to buy housing starts is a measure of how many homes they actually started construction on. And then FHA announced their loan limits for 2016 on December 9th with Mortgagee Letter 2015-30. The mortgage loan limits, max loan limits is staying the same in Delaware, and all 3 counties staying the same in Maryland and Pennsylvania. So there were changes in 188 counties, but those are not locally here. We do have a blog article on that to give you more details. If you want to look at that, there's a link in the blog to get to the loan limits and to see what they are for each county of Maryland, Delaware, and PA. And then the next local news, the first time homebuyer seminar, the next one in Newark is Saturday, January 16th from 10 a.m. to noon at the Christiana Hilton Hotel. And then the next one in Dover is Saturday, January 30th from 10 a.m. to noon at the Dover Holiday Inn. You can register for either one of those events by giving us a call in the office at 302-703-0727, or you can register online, www.delawarehomebuyerSeminar.com. Look forward to seeing you guys next week.